relatively slim margins, they will tend to use futures because futures are the most efficient. You don't have to pay a premium. It's very, very cost efficient. So they will use futures. If you take the example of F&B, food and beverage, take the famous example of the wine importer, let's say from Europe, from France. There are 3,000 French wine importer in Hong Kong, if you can believe that. Well, in their case, you see, their business is actually, their revenue is correlated to the level of the currency, to the euro dollar. Because when euro goes down, obviously the price of wine is cheaper when they sell to China, and they sell a lot more. And when the euro goes up, well, wine is more expensive, right? And so they sell less. So they do take this into account. So what they want to do is, typically these guys, sometimes they use options, right? Because if the euro goes up, they want to be able to exercise their option to stay competitive and to protect their profit margin when euro dollar is going the wrong way for them. However, when the euro goes down, all of a sudden, they make extra money, they become more competitive, and they do more volume. So they don't exercise. So that's why, that's an example, F&B, where they use options. And third, very specific example, for instance, are the real estate investors. Whether it's direct investment in real estate or through funds, I mean, typically they like to use futures. Why? Is because with real estate, I mean, they need to invest and hedge for a very long time, for many, many years. So here as well, they need a very efficient, very cost-effective way to hedge, very transparent. That is why they use future.
Okay, thank you very much. I think you mentioned also in your slides earlier on that maybe only 20% of SME businesses are actually hedging their foreign currency risk at this moment. So although maybe 80% are using futures, you know, there's still a lot of SME businesses who aren't hedging at all. And I think we do tend to see that. And the problem is there will be a lot of fluctuation in their profitability. I think some of your graphs have shown that. And our concern at this moment in time, in terms of all the uncertainty that's in the economy, you know, a lot of these businesses before, they were showing a large FX gain in one year, a large FX loss in the next year. But when they've got a large, say, net profit or operating profit, sometimes that's not easy to see. But now, once profit margins are going to be reduced just because of the reduction in volumes of trade, you know, this is going to have a much more significant impact on their overall profitability. And that could start to bring some concerns to the users of the financial statements, particularly those who have got banking facilities with, say, covenants such as gearing ratios, interest rate cover, or liquidity ratios. Once these foreign currency risks start to realize on the balance sheet, there's going to be a lot of stress on there and potentially breach some of those covenants. So I just wondered, when you worked in the banking side, Alan, what was your experience on this subject? You know, would the banks be quick to recall loans, especially in times like now where maybe the risk of default is higher? Or would they give some leniency to the businesses, or potentially even adjust the covenants for factors like foreign currency gains and losses?
Sure. So when a bank is going to analyze the business and the solvency of an SME or a corporation, they would look at many things. But for instance, of course, they would look at the earnings, right? And so for a company that's not going to hedge basically the cash flow and the earnings in foreign currency, that will be a problem, because what the bank will do, the bank will use a scenario, a conservative, basically currency fluctuation scenario to apply on the earnings, okay, in order to be conservative in their assessment. So that means that a corporation that doesn't hedge the foreign cash flows and the foreign currency earnings will have a big haircut from the bank on the earnings to take into account this currency volatility and this currency risk. So of course that will affect negatively the creditworthiness of the corporation. Also, at the governance level, obviously this is the role of management to manage the risk of the corporation, and the currency risk is one of them. So not hedging currency risk is not best practice, and that will affect the sustainability of the business in the long run, and therefore the solvency as well. So that's the two aspects that will really affect the creditworthiness of a corporation. So hedging hedging their earnings and also having a clear hedging process at the governance level.
Yeah, I think that's completely right. Like you said, the going concern issue that I mentioned in my first point is, is a very hot topic in terms of businesses. We're all facing a challenging time, and so the uncertainty around the currency risk. If you are able to hedge that risk and able to put the business in a better position, obviously that is more important from a governance perspective. So trying to move on from the doom and gloom, I mean, most of my comments have been about, the economic climate that we find ourselves in. But, we do have to remember that there are a lot of opportunities. A lot of businesses, they have done exceptionally well during this pandemic period, such as online businesses, PPE manufacturers or healthcare providers. We've also seen a lot of businesses diversify themselves, such as F1 teams have started making ventilators to help those in need. So I do think once we start to get out of this pandemic period, there will be a lot of opportunities for those businesses who have done well, perhaps a lot of M&A opportunities to expand into new markets, pick up business distressed assets on a bargain purchase. But obviously these could be subject to FX risk depending on where those acquisitions are going to take place. So just wondered, Alan, is there any other areas that SMEs need to think about when they're hedging these sort of opportunities?
Oh, absolutely, absolutely. Well, in the case of M&As, for instance, and also the private equity business and the venture capital business, obviously on one side, you have the investors' currency, right? That can be, let's say, US dollar or other currencies. That's the liability currency part of the deal. And then you have the corporate target or the asset currency. So on both sides, the investors and the corporate target, right? I mean, they will have to resolve an asset liability currency mismatch, right? So there are two solutions. Either the currency hedge happens on the investor side, where that means that basically they will swap the investor initial funding, natural funding, into the currency needed to acquire the target, or that will happen on the asset side, on the corporate on the corporate target side, where they will need basically to put a hedging process in place. But in any way, obviously, when a corporation wants to acquire another corporation, they will analyze this corporation, the target corporation, and they will look at what happened. They will look at the foreign cash flows, and they will look if there is in place a hedging process. And if not, they will have to put a hedging program in place or adjust the hedging process in order to complete the transaction and resolve the asset liability currency mismatch.
Yeah, definitely. And I think, a lot of these transactions, they will be of significant amounts. Potentially, sometimes there are contingent considerations, which are based on performance targets in, say, 1 to 3 years. So it does expose the investor to significant fluctuations in currencies over that period of time. I think, like I say, once those acquisitions are taken place, there will be expansion to new markets, so you need to think about the strategy. On that point as well, I think, post-pandemic, a lot of businesses, they are looking to diversify. We hear a lot of clients saying perhaps they were too reliant on a particular supply chain or a particular market. So once these lockdowns started a few months ago, it really did impact their business continuity plans. So perhaps they're now looking to diversify to come up with new supply chains or new customer bases. So again, that will obviously create some FX risk to those businesses once they move into those new markets. So Alan, I just thought, when businesses start to adopt these new strategic decisions, when should they start thinking about hedging? Should it be right at the beginning when they start to look into those new markets? Or would it be once they've kind of established themselves, got their foot into the door, and then they start to see what is the volume of trade they're going to be doing there?
Well, I mean, it is never too early in a business, in a cross-border business, to think about currency risk hedging. Why? I mean, number one, if you launch a new business within your company, it's a cross-border business, I mean, you will need to forecast your profit margin. So you will need to understand how you will protect your profit margin, right? So you need to think about your hedging process. I mean, secondly, for SMEs that will do cross-border business, I mean, obviously they need to address the fact that they will deal with clients and suppliers in foreign currencies, and how are they going? Will they be able basically to hedge this flow in foreign currency? And lastly, as soon as you have within a cross-border business, they're going to have different amount in different currencies, and they're going to do business in different places. So they will have this cash liquidity management to perform. And it's going to be very important to manage their business. So they need to understand in advance how they will perform all these actions. And of course, because they will need to hedge, they will need to address the fact, how do I optimize my hedging costs as well? So that's why it is so important, and it's never too early to think about currency risk hedging.
Yeah, thank you very much. Completely agree. So I think we've got around 10 minutes left. So maybe we will move on to any Q&A that's in the chat box. I've seen a couple of questions come in already. So if anyone has any questions they would like to ask, please put them in there and we will pose them to Alan and myself. So we've got one question at the moment, Alan. Please could you help to explain again about how to get 3% in the money market when you talked about cash management?
Yes, so when I took this example, for instance, I was talking about a corporation that would have, for instance, a business, some business in RMB, and therefore hopefully have some profit in RMB. And today the daily money market in RMB is worth approximately 3%. If you're interested in the detail on how we get the 3%, I mean, please feel free to contact us. But basically, that's what banks typically, that's the kind of return banks in Treasury Department of banks will have, or large institution. That's what you get from the money market at the moment. Of course, this is not the case in US dollar. You get much less in US dollar, and of course in euro you get zero, and sometimes you're happy not to get negative interest rates.
Okay, thank you very much, Alan. Hopefully that has answered your question, but please let us know if you need any further clarification. At the moment, we're waiting for any further questions. So perhaps I can just ask you a couple of more questions, please, Alan.
Sure.
So could you help just break down what is the real cost of hedging to a business who does embark on that?
Yeah. So bottom line, there are two main costs. Number one is the hedging FX hedging carry cost. That could be a cost or a profit. And secondly, that's currency conversion. That is why it's so important to really analyze properly how you will hedge in order to minimize this hedging cost if it's a hedging cost. But sometimes it's a profit, just like in the case study we've seen together, right? And in this case, you want to try to maximize basically this hedging profit in order to just increase your P&L. The second part of what can cost you when you hedge, as I mentioned before, is obviously the recurring currency conversion. That is why it's so important to have a setup and to find the right setup, safe setup, to be able to trade currency mid-market or close to mid-market. Otherwise, this recurring cost will add up to several percent per year and will really weigh on your profit margin.
Okay, thank you very much, Alan. We have got another question in the chat box. So if a business is currently gaining on their foreign currency at this moment in time, do they still need to embark on implementing a hedging strategy? What are your thoughts?
Of course. Well, that means this business is lucky. So I think that would be great to just, if you hedge, you're going to lock this extra profit. So it would be very interesting indeed to lock this profit. As I said before, you're right. If you don't hedge, you can gain or you can lose. But the reality is you don't need to do business to play on the currency market. You can do that on your own investment, right? And in any case, as I said, in the long run, if you don't hedge, it can be proven that the expected value of your earnings will be lower, because you'll go through a period where obviously currencies will have a negative impact on your earnings, and then you will be missing liquidity at this point. That can drive you can mark then operating losses, and that can even drive some companies to bankruptcy. So it's I think, bad idea to just not hedge. And so yes, even if you make money right now on your commercial transaction because the forex is going your way, you can hedge to lock it, or you can use options to still have the upside, but at least protect your downside.
Yeah, and I think that's kind of the key point at this moment is perhaps there have been gains in the previous years, just that with the challenging economic environment we find ourselves in, there's a lot more pressure on profitability when we even just ignoring those currency risks. So there's still, obviously, we can take the gamble whether to expose ourselves to the gain. But is it something that businesses can do in the current environment, or could a small fluctuation downward create a lot of pressure on the balance sheet and the overall profitability of the company? So we have another question. Can you explain about improving profit margin through hedging if currently taking a buffer?
Yes, of course. So as I mentioned before, a lot of SMEs doing cross-border business, typically they're pricing a buffer into the transaction. That's something they do all the time. So when they decide to hedge properly, right? As we witness, I mean, some of these SMEs, they keep this buffer, right? So as they are hedged, they just end up with this buffer, let's say it's 5 to 10%. They end up with an extra profit of 5 to 10% on top of their profit margin. Then they can choose whether they want to keep this buffer as an extra profit, or if they can use it, right, to be more competitive and sell more of their services and products.
Okay, thank you very much. We've got another question. We've got 5 minutes left. So I think this is more about your platform. So does it involve our local bank when using your hedging products?
Well, actually, as I mentioned, no, we're not using banks in what we do for this specific Forex hedging, because they are intermediaries, right? So what we do, we use a broker that can provide us direct market access directly to the exchange, for instance, the Hong Kong Futures Exchange. That means that the SME has a direct access to the listed FX market and can trade mid-market or very close to mid-market, right? And also, the SME doesn't need to have a credit line with a bank, so it's much cheaper, no intermediary service fees, so it's cheaper and no counterparty risk, right? And also, the SME, by using basically trading directly on an exchange, has a complete visibility on the price as well. So no, we don't use any local banks as far as our hedging solutions are concerned.
Okay, thank you, Alain. I think one maybe final question that we can raise is, if an SME does want to embark on an FX hedging process, what would be the first step that they should go through? Yes,
well, obviously the first step is, to understand what the risks are. So as I mentioned, so the first step would be to understand basically their risk, the currency risk they are running. And to do that, as I mentioned, they need to perform a full currency risk analysis, which is the first step of the hedging process I described before. So to do that professionally, they may want to consult with a Forex hedging solution provider like us, for instance, so they can come up with a complete analysis and a report with respect to their currency risk that can, of course, allow the design of a hedging program to hedge their currency risk.
Okay, and I think we've got time. One final question was, who are the top brokers offering this type of service?
The top brokers, so I don't know exactly. So yeah, for direct market access, I mean, there are many brokers. I mean, for the direct market, you can use, for instance, Interactive Brokers would be one of the biggest and the cheapest. So as far as we're concerned, for instance, Interactive Brokers is a tool that is used to have direct market access. And so that's there are many others, but that's, for instance, that's the one that we like to use because they are the cheapest. Okay, thank you. I hope I answered the question. Thank you. Yeah, so I think we've got a couple of minutes, so maybe we'll wrap up today's session. So thank you for your time, Alan. Really enjoyed the discussion. If anyone else on the call does have any further questions, then please feel free to send them to Alan or myself, and we will try to give some responses to those. So I'd just like to add some closing remarks. So firstly, thank you to all of you who've taken your time over lunch today to join today's session. I really hope you found it useful. Obviously, thank you to the Canadian Chamber for organising today's event, and I really appreciate all the effort that you've been through. And just a final one from me. So the economic research paper I mentioned at the beginning,
If you do want to have a look at that, you can go to www.icaew.com. So over to you, Alan, if you have any closing remarks.
Just as a reminder, for those who would like a free currency risk analysis and case study specific to their company, please don't hesitate to contact us. Again, thank you, Ryan, for moderating, and the Canadian Chambers for hosting. Thank you very much for your attention.